Hello traders and welcome to another video review. Today is Friday, February 13th, 2026. Let's take a look at the Forex economic calendar for today. So what do we have here? Inflation expectations from New Zealand up from 2.3 to 2.4. CPI in Switzerland scheduled for release at 8:30. Spanish CPI, Polish CPI, all of this data are scheduled for release at 9 and 10 o'clock. At 11 o'clock we got GDP data from the Eurozone scheduled for release and trade balance. Interest rate decision in Russian Federation is scheduled for release at 11:30. And then we go to the New York session. We got the Bank of England MPC member Peel to give a speech at 1 o'clock. ECB, the Windows will give a speech at 1 o'clock. Core CPI data and CPI data are the major releases during the US session. Those are scheduled for release at 2:30 as usual. At the end of the day, US Barker Hughes oil rig count and total rig count is scheduled for release. So that's about the calendar for the Friday. So let's now take a look at charts, and we start with euro-dollar. So the calendar is not that busy, and the major data releases are during the US session. You can see that the level we mentioned before on a 4-minute time frame is just dropped a little bit. 1.1888 is the obstacle for the bulls. They are failing to break above this level multiple times. Now they're going lower. The major technical support is 1.1834. Let's switch to the 4-hour time frame chart to see the bigger picture. As you can see right now on a 4-hour time frame chart, momentum is negative, and we are testing the 100 periods moving average right now as well. Nevertheless, still the major level for the day is 1.1834, and this level should be tested sooner or later. So that's the situation for the euro versus the dollar, bearish bias for today. Cable. Cable is following the US the euro dollar, and now it is developing another movement to the downside. Sorry, the breakout below the 100 periods moving average at 1.3655 is done. Recent local low 1.3589 is done. So right now we change this color to red because the level of 1.3622 is now technical resistance. Negative momentum supports the bearish outlook. Nevertheless, if we take a look at this situation here, it doesn't actually look like a bullish situation. It doesn't look like a impulsive development. So maybe there is something else cooking here. Nevertheless, whatever it is, if we compare the time series, 5 waves to the upside is done briefly, and this is too long. Basically, it is too long, in time. This correction to the downside, to consider it as a valid correction for this wave. Let's say 1, 2, 3, 4, 5 to the upside is wave 1, and now this is wave 2 in progress. No, something is definitely not right here in terms of the time. So basically, we need to wait for the another outcome to come out. This is the situation of the US dollar versus the Japanese yen. Consolidation between very tight range 154.04 and the swing low from the January 27 122.11. We are trying to bounce from the extremely oversold conditions. Right now RSI is 43 points only, but we are still below the nearest trend line resistance and the 100 periods moving average. So the overall situation here looks rather bearish. Of course, the major technical resistance and that game changer for the bulls is located here at basically at 157.30, but the local high is 157.66. For now, consolidation in the tight range, waiting for the further development. Now, gold market, as we expected, developed the wave B to the upside, and now we start to move lower. The question is whether this situation is the actual correct downside scenario. So all right, so what do we have here? This orange trend line is now violated. Now the market is testing this orange trend line, right? So we might see some sort of the test and rejection and then movement to the downside. If we break below 4,877, yesterday's low, the outlook will still be to the downside. The outlook will still be negative. Let me just change this technical support for this low here from February 6th. It's 4,654. This is the next target for the bears and the technical support. Remember, we are waiting for the wave C to the downside to develop into the impulsive manner, into the impulsive scenario, just as it is right now, as it was basically on the wave A. S&P 500, yesterday's sell-off. So we are still inside of this. Look at this. We are still trading inside of this zone here since the end of the year. This is December 18th. This is the 26th. This is the beginning of the new year. So that's the New Year's 2026 January and February range. So nothing is going on here. Nothing special is going on here, except the fact that we are going to the upside a little bit, then to the downside a little bit, then to the upside a little bit, then to the downside a little bit. You can see it clearly even on the RSI. Nevertheless, right now, after hitting the 7,000 points mark, this chart is looking very bearish. This situation here is looking very bearish, as the market is doing some sort of the pressure, especially the bears are making pressure on the market. Very nice V-shaped reversal, almost in 80% retrace already, right? No new high. That's one of the most important thing here. No new high and no new low as well, but the pressure is here visible very, very, very strongly. The bears are making this pressure, and that's curious because in the background we have the uptrend. So if there's a V-shaped reversal, no new high, despite the fact that in the background there is a uptrend, that's a weakness of this market. So maybe something is cooking here. Crude oil. If we switch to the daily on the crude oil, you can see that this chart is rather very manageable. So the crude oil is trading very, very closely to the previous levels, like the level from the September. So the highest level from 2026, 66.40, has been rejected, and the market is slowly going back sub 60 levels. Right now 62.72 on the daily time frame chart. Now if we break below this level here, 61.11, the next level is $60 per barrel of oil, and then even lower. Moving average 60.04. That speaks for itself. So that situation here is pretty technical, extremely overbought conditions, and a pullback lower. If we break below the level of 50, if we break below the moving average, which is on the level of $60 per barrel, the outlook becomes more bearish. And last but not least, the Bitcoin. Actually, the Bitcoin doesn't do anything bullish yet. As you can see, we got this situation with the trend line. We spoke about it yesterday. So there is still no avail from the bulls. They're trying to break higher, but they fail. Yesterday's nice sell-off to the downside, back down towards the level of 65,117, and slowly but surely, with this kind of a momentum developing into permanent negative momentum, slowly but surely, step by step, we are penetrating lower levels, and soon we will see 65, 64, 63, 62 down towards this major price extreme and the local low and the swing low from the February 6th at $60,000. So as you can see, we are doing that very, very simple trade here, simple price action up to the trend line, pullback, up to the trend line, new low, up to the trend line, new low, up to the trend line. What's the next in sequence? New local low. And this looks like a quite solid scenario for now for the bears to making pressure on bulls and trying to see if there is any demand left around the level of 60,000. However, the breakout below this level is still on the table. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.